Workhorse is an interesting runner that would do better in renaming itself to Wildhorse. For this horse sure is more than first meets the eye, and any decent trader that learns how to tame it is in for the money ride of a lifetime. We're gonna throw ourselves directly into the action here, but first the mandatory stuff. Do note that nothing in this episode is financial advice. Everything I say is my own opinions only. And if you like this episode and if it helps bring clarity to the current technical status of Workhorse, then please like and subscribe and share this episode with others who may benefit from hearing this too. Now, let's begin by looking at Workhorse from a first glance perspective. If we look at the weekly log chart, we had a steep 1650% increase in just 3 months. This was followed by a little pennant, which in turn had a northbound outbreak of about 70 to 80% or so. Now, on the other hand, we seem to have begun some sort of a sideways range, and quite a violent one at that, as we're talking 100% up and 50% down moves. On top of that, the stock has gone up by around 6,000% at most since 2 years back. However, dating back since its 2010 IPO, the stock has only doubled in value. My point with this is that Workhorse is much more of a trader's paradise than it is a hodler's paradise. Any good and attentive trader could have milked this baby off some serious gains. And to prove this point, we will mainly focus on the RSI strategies in this episode. And to anyone who follows this channel, you know we look a lot at the RSI, as a correctly utilized such is the ideal momentum indicator, and one that on its own identifies the juiciest risk to reward spots possible. The problem with the RSI is that most traders just scratch the surface of this remarkable tool, and to the point where they actually miss out on all of its hidden magic. For at the moment, most traders use this electrical diamond drill as a hammer, caveman style. But once you learn how to truly use the RSI, you will feel like a man blind from birth who is finally blessed with seeing. Now, the RSI looks strong on the weekly, but not so much on the daily, although it is still trading within a bullish red channel. Just look at this, for example. For what is rather good news in this company is that it regularly seems to run through some little mini market cycles of its own, in which the RSI lines work exceptionally well. In late November 2012, for example, we got a lower bullish red closing, after which the price peaked at plus 500% in just 6 months. Then we had another one in July 15, upon which the price went up by another 500%, this time in 9 months. Later that same year, in November 2016, we were nicely let off the hook as we were given an upper bearish blue touch that saved us a massive minus 78% in the upcoming 4 months. It then gave us a buy signal at $2.60 and then another one at $2.45, which were then both released at $3.35 for an average profit of 33%. Still not bad for just a few months of swinging. But the major thing is that the upper bearish blue signal in January 2018 again saved us from yet another bloodbath, this time from losing minus 89% of our money. Does this sound like some sort of a holy grail? Well, when these RSI lines are validated, they are just that. And if you want to learn everything about them, then do yourself the biggest trading favor of this entire decade and watch this RSI trilogy, the magnum opus of this channel. The monthly chart looks strong, and the RSI has cooled off in this continuation pattern while still remaining in a strong bullish RSI channel. The downside with the monthly chart is of course that its forecast stretches much further into the future than that of the daily chart. But given the density of the presumed continuation pattern, flag, pennant, whatever it is, in combination with the fact that it may very well be in the midst of a 4-wave count, an outbreak could possibly lead us to an aggressive 5th wave. Of course, each wave so far has been significant, with plus 1,345% for the first one, minus 75% for the second, plus 2,200% for the third, and a comparatively humble minus 50% for the fourth. And do mind you again that this is on a log scale, so whatever meets the eye is proportionate. This regardless leaves me wondering what a potential wave 5 could lead us towards. Spontaneously, and given the nature of this run so far, I'd say we'd easily run into the 200s. This might sound high, and I'm awfully aware of that, but do bear in mind that this is not a workhorse, this is a wild horse.
So, how's that leg doing?
Great, never better.
Sorry, Thunder, I gotta put you down.
How's your leg, huh? How's your leg? You ready to race? Huh?
And even though it were to make a 10x parabolic move for 1000%, it would still amount to being the least impressive wave of the 5. Of course, such 5-wave count would not encompass a full market cycle, but rather a minor market cycle of a bigger market cycle. Unfortunately, we do not have enough data to go by, as the company was launched to the public in 2010, whilst the global indices were all busy establishing their markup phases. In that sense, the company has been a disappointment, as it has merely doubled in value during the biggest bull run in history. But on the other hand, it doesn't mean it still cannot sprint, because sometimes the big winners are not the obvious ones when the starting chute goes off. They are the ones that close in fast from behind when no one expects it, thus taking everybody by surprise. And maybe Workhorse can do the same. And throw in that Nasdaq parabolic run to the mix and it sure looks promising for Workhorse. The short-term maximum downside from a probability perspective is the EMA 20 on the monthly, which coincides both with the 618 fib and the previous two all-time high tops. This area at around 1050 to 1250 constitutes a strong level of support and is certainly one that could be retested if the global indices were to retrace for a bit before moving higher. This of course would be a significant short-term plunge, one of around minus 50%. However, it would also fully and satisfactorily complete the wave 4. I'm not saying Workhorse will go down there, but if it were to, then this zone would amount to the ideal buying opportunity, the ideal risk to reward spot. Apart from that, depending on how this seemingly continuation pattern in the making plays out, whether be it a flag, a descending channel, a triangle or what have you, a northbound outbreak henceforth will too be a solid buying spot. In this sense, we may be given no less than 2 different buying opportunities, both significant from a risk to reward point of view, and especially if the US Nasdaq continues to show parabolic tendencies. That was all for now. Thank you and goodbye.